Short exercise 3-6, adjusting entry for prepaid rent. So on September 1st, big fan of Toledo, prepaid 6 months of rent for $3,300. Let's look at our requirements really quick. So we're going to record the journal entry for buying it on September 1st. And then at the end of the month, on September 30th, we need to do the adjusting entry to show that we've used up 1 month's worth of rent. And then we're going to post it to T accounts. So requirement 1, record the journal entry for the September 1 payment. Record debits first, then credits as always. Select the explanation on the last line of the journal entry. All right. Big fan of Toledo, prepaid 6 months of rent for $3,300. So we know the amounts are $3,300. But what are the accounts? So what are we getting out of this transaction? Why did we spend $3,300? We're prepaying 6 months of rent. Now, have those months of rent been used up already on the very first day that we buy it? No. Therefore, they have a future value, so that's an asset. So what is that asset called? It's called prepaid rent. And I'm debiting it because we have more prepaid rent. And if we look at the accounting grid, prepaid rent, an asset, goes up on the debit side. All right. Then, how did we get it? We paid cash. Which way is cash going? It's going down. Cash is an asset, and assets decrease with a credit. So then we need an explanation to record rent paid in advance. Okay, notice that was on September 1st, and we bought 6 months of rent. It is now September 30th, so a month later. Do we still have 6 months worth of rent? No, we have only 5 months in there. So we have to show that we've used up 1 month of rent. So how much is 1 month of rent? We take $3,300 divided by 6 gives us $550. So we've used up 1 month of rent, which is worth $550. So we need to lower this prepaid rent asset by 1 month's worth, which we just said is $550. So how do I lower this account? Remember, it's an asset. You lower it with a credit. So I'm going to skip the debit, go to the credit, because that's kind of easier to understand. Prepaid rent is going down by 1 month's worth, which is $550. And whenever we use up prepaid rent, we have to record rent expense. And why am I debiting that? Because this expense is increasing, and expenses increase with a debit. So then I need an explanation to record rent expense. And then finally, we're going to post these to the T accounts. Here's our T account for prepaid rent and rent expense. There's no T account for cash because that's not really super important in this exercise. Hopefully you know how to post to the cash account. It says use T accounts, post the journal entry and adjusting entry to the accounts involved, and show their balances as of the end of September. Ignore the cash account. Post the journal entry and adjusting entry to the 2 accounts using the dates as posting references, and then calculate and enter the ending balance of the accounts using BAL balance as a posting reference. All right, so we're just going to start from the top. So we got prepaid rent, $3,300. So I'm going to copy and paste that. It's on the debit side. So here's prepaid rent, $3,300. Now remember, this is a T account. Here's a dark line, here's a dark line, and then here's the balance line. So this was as of September 30th. All right, then we do cash, but remember cash is not, there's no T account for cash, so we skip it. We go down to rent expense. We got $550 debit. So I'm going to post that as a debit to rent expense. And the date is September 30th. And then finally, we've got prepaid rent, $550 credit. So I'm going to post this credit as a credit to the prepaid rent account. That's September 30th. And they want our balances. So let's do the easy one first. What's the balance of rent expense? Copy and paste. 550, put BAL, stands for balance. So we have $550 of rent expense. And then what's our balance of prepaid rent? Well, we had $3,300 on September 1st. And remember, this is the minus side. Since prepaid rent is an asset, the plus side is the left, minus side is the right. So $3,300 minus $550 gives us a new balance of $2,750. The reason I'm putting it here is because this is our horizontal black line, which shows that we're doing a mathematical operation. In this case, we're taking 3,300, subtracting 550, and that gives us a new balance of 2,750. So how many months of rent do we have as of the end of September? Well, at the beginning of September, we bought 6 months. So at the end of September, we have 5 months. And we can double check that math just to calculate, just to double check our calculations. If we said 550 is 1 month, 550 times 5 months gives us 2,750. So everything looks good. So that's the adjusting entry that you would do at the end of the accounting period whenever you have prepaid rent. Anytime you prepay something, right before you do your financial statements, you have to do an adjusting entry, which is this one right here. And that updates your accounts, and it would correct the account balances. So if you forgot to do this adjusting entry, instead of 2,750 on your balance sheet, it would show prepaid rent of 3,300, so your assets would be too high. And again, if you forgot to do this adjusting entry, you wouldn't have the rent expense, which would mean you would be missing out on this $550 of rent expense, which would mean your profit would look larger than normal, and you would pay extra taxes because your profit would be abnormally high. And that's it.